Dave down the pub has told me this. Dave down the pub has told me this. Dave.
You guys have conversations with brands, make sure that you have that paper trail.
But if you are going on holiday and whilst you are there, you are posting to your Instagram stories.
When we had our call, I did not know that was a thing.
Don't Google your symptoms. Don't Google your tax things. It's just, you're going to end up in a bit of a muddle.
Today we're very excited to have Leanne on. Leanne is my accountant for my UGC journey and social media, and we thought it was really important for other creators out there to get someone on who's actually educated and actually does this as a job to find out more about kind of the right things for creators to do and whatnot. So Leanne, first of all, I'd love it if you wouldn't mind just giving like a little bit of background about yourself and kind of how you came to specialise more within this industry, because as we all know, there's not many people doing this kind of thing or specialising in it.
Thanks for having me on today. Firstly, I've been an accountant for quite a long time, to be honest. I set up my own business back in 2018 after my son got ill and I couldn't then deal with the whole going to work, and then I got ill as well. So going to work, going out, it became an absolute nightmare. Then from there, we started out just dealing with lots of just small businesses. But since that point, the UGC content creator market has grown so much. And we had some lovely clients working in the industry already. So it just became a natural progression for us to move into this market. It is an area that a lot of traditional accounting firms just don't understand. They don't get it. It's completely alien to them. And also, we find that a lot of our clients, because they are generally younger people, are actually found it quite intimidating to go to some of the traditional firms, thinking older men in grey suits, that sort of thing really put them off. So we were just trying to do something a little bit different, to be honest. And it's worked really, really well and put us in a bit of a unique position to help people in this industry, but do it in a way that, we're not scary, we're not intimidating. We'll explain everything simply and easily without any jargon, hopefully.
Perfect, thank you. No, I think that's one thing that drew me specifically to you at the start as well, was the fact that you were very friendly. And even when we had our first call, I was like, I didn't feel silly, if that makes sense. Yeah. Because I completely agree with your point there too about not other accountancy firms or whatever kind of understand it. Because for example, my fiance is a chartered accountant and he has no clue.
Yeah,
when it comes
it's
to
a
actually like for me being social media, yeah, there's like so much in it, and like anytime I'd ask him questions, he'd just be like, look, I don't really deal with that industry, that I can't give you proper advice. Like I would need to go do a lot of research. But then a lot of the time I was like, okay, I need to find someone that specializes.
Yeah, and I think it's a little nightmare as well for people, especially when they start out in the UGC world, is that they already have to be camera people, stylists, like producers, and an accountant. Like that's just too much. And I feel like I've been in this situation for way too long. And then through Ali, I actually met Leanne as well. So she will be now my accountant too, which I'm very excited. And I feel like it's very much of like a word of mouth situation, like almost like a marketing, face-to-face marketing, right? Because we are such a social circle as the UGC creators that we just need to support each other. So obviously that's a big part of our mission here as, a Clip Collective, is to actually get the audience what we needed when we started, and, to make it easier and more accessible. And with people like you, Leanne, which is absolutely incredible what you're doing, is because you're giving us the chance to actually get some of that burden onto you, basically.
Yeah, exactly.
And let us focus on the things that we want to pursue.
Yeah, and I think when you've come into this industry, often you don't come from like a corporate background. A lot of our clients don't come from those sorts of backgrounds where they would ever have even touched on this stuff before. And I think that makes it much harder and much more scary to actually come to think, hang on a minute, where do I even start with this? So yeah, I think it's a really great industry to work in, and one that we can make a massive difference in, and also one where there's so much misinformation out there. And that's something that we're trying to actively work towards changing, because I think people will be finding themselves in hot water just simply because they're reading something online, thinking it's correct, following that advice. And I've seen some real shockers out there. So I think it's really important, if you aren't sure, to actually get professional help on this one. Obviously, I'm biased, but I think you can end up in this industry, you can end up in a lot of hot water very quickly.
But isn't it like with the, Google the doctor, right? It's like when
Oh,
people start Googling and they're like, oh, yeah. And then, no, actually, just go to the doctors. Just get it checked.
We have this saying in accounting circles, which is Dave down the pub. Dave down the pub has told me this. Dave down the pub has told me this. Dave down the pub is like the fountain of all accounting knowledge and actually knows nothing. Somebody comes to them and they're like, oh, Dave down the pub told me this. And we all have a laugh about it between ourselves. Like, not because it's, we're laughing at the person's expense, but it's just because there's so much misinformation out there. And there is always somebody that has told you something. And 9 times out of 10, it's either not relevant for your business type. For example, it might be relevant to a larger company or a different business model, or it's just completely wrong. So, it's like you say, don't Google your symptoms, don't Google your tax things. It's just, you're going to end up in a bit of a muddle.
Yeah, just don't trust Dave, basically.
Yeah, don't trust Dave. Dave does not know what he's talking about.
And I guess also in this situation, don't trust ChatGPT as well.
Oh, definitely.
It's the same information, right?
And the thing is with ChatGPT, it pulls data from all over the internet. So what it might be doing is pulling in European tax law. It might be pulling in American tax law. There's no guarantee that what it's pulling from is firstly accurate, and secondly, even in this country. So you've got to be so careful when it comes to ChatGPT that actually it might pull in something and then you might Google it to verify it, but actually it's brought it off of an American site and it might be correct in America, but their rules are very different to ours. So definitely do not get tax advice from ChatGPT.
That's for sure. That's for sure.
Just on that then, I suppose one big question we want to ask you was the fact of, say for example, obviously I have used my accountant, but I'm just starting out. I went into being a sole trader. What is the first things then you would recommend to someone to kind of do or to get started on the journey of trying to like doing their taxes or doing their self-assessment properly?
So the first thing that's really, really important is if you've taken over £1,000 in either items in lieu of payment. So people call it gifted items, but I hate that phrase because it gives the wrong idea about it. But let's say you've received £1,000 in goods or you've been paid £1,000 in services in a tax year, you need to register for self-assessment as a minimum. Somebody would choose to go down the limited company perspective, but often that's not the right idea right at the start because it's much more complicated. So I'll talk about that in a minute. But the first thing you would need to do is make sure you are tracking all of the income and all of the expenditure. I always recommend getting a separate account for business early on. You can get some really good free bank accounts now. There's loads out there, for example, like Metal, Monzo. A lot of people go to Tide, but that's not free. There's fees on that. There's Starling. I mean, there's literally hundreds. It's not like the olden days where you used to have to go and sit in a bank across from a bank manager and tell them why you should be allowed into their bank. You have an app now. So that's really, really important. It makes tracking your expenses much easier. The other thing you want to get into the habit of doing in the beginning is doing it little and often. Do not leave your receipts in a shoebox under the bed until January the 26th to get your tax return in for the 31st of January. It is a bad idea. It will be stressful. You won't know what money you've made and you won't be able to actually put any money aside for tax because you're not going to have a clue where it's going to go. The other thing is that people don't realise a lot of the time is that you need to pay national insurance potentially, depending on your earnings level. If you go over the threshold, it's not just the tax you need to put aside, it's the national insurance as well. And that catches a lot of people out. The other thing that catches people out is payments on account. Now, if your tax bill has gone over £1,000 in a year, you have to pay 50% of the tax for the next year in January and another 50% in July. So that's something that people don't account for. They get to the end of the year, put the tax return in, and the tax bill is 150% of what they were expecting. Now that could be a massive amount of money that you need to find. So I always recommend doing it early. So the first year you do it, you need to register for self-assessment before October. Like after the tax year. So let's say, for example, you've gone over £1,000 in this tax year. Over the summer, you get a load of collaborations in or a load of work in, and you go over £1,000. You need to make sure you've registered by October 2025. You then need to submit the tax return by January, the end of January in the year after the tax year. So, for example, 2023 to 24 needs to be submitted by the 31st of January 25.
That's so much information. I think one key thing there you said was the fact the 150% for tax, because when we had our call, I did not know that was a thing. Yes. And that definitely surprised me. So even with that, I've heard out there, I wonder what your thoughts is on it too, the people say that you should always then save potentially 25% of every piece or like paycheck you get in towards actual tax. So then they say that you can have like a little holiday because you're hopefully then have paid too much and you'll not have to pay all of that. But what would you recommend even in terms of making sure for that initial first year? Because a lot of UGC creators are new and they're only in their first or second year, to make sure they're getting that 150% secure, that they're not panicking then
Yeah,
when
I
it
think
comes.
it really depends on your personal circumstances. So let's say, for example, you're doing UGC as a side hustle and you've already got a job. Actually, what you might find is that the UGC income pushes you into higher rate tax. If you've got children and getting child benefit, you might end up repaying child benefit. There's lots of different things to consider here. There's student loans, all these things mean it's not as simple as saying just put 25% aside. For some people, that'll be fine. So let's say that UGC is your only income and you've got no other jobs, no other income at all, then 25% should be more than sufficient, because obviously you've got £12,570 a year, which is completely tax-free. If you're not already using that in a job, then the 25% is going to give you more than enough. If you are already working in another job, or maybe you've got rental properties or income from other sources in any way, shape or form, your personal allowance will already have been used somewhere else. And actually what you might find is that if you're going to go over 50k, so it's 50,270, if you're going to go over that figure, you're going to need to save a lot more money. And there's lots of other variables as well. So what I really recommend doing is looking at your earnings and your income as a whole. Like, look at your amount you're going to earn from your job if you've got one. If you are purely UGC, it's much simpler. But what you need to be doing is every month, as a minimum, listing out your income, listing out your expenses, working out what your profit is. And that's the one that you need to be thinking about. The profit figure is what you're going to be taxed on, and not your income, not the actual money you
Yeah,
get in the first place.
I think that's actually really useful for people too, because a lot of the time it comes down to just being organized. So like doing
Yeah.
that, like having a day you set aside for your finances and like, okay, I know I'm on top of this, that nothing's going to creep up either.
Speaking of like keeping track and staying organized, if we were to break it down to like the most important and necessary sheets that people should have, what sheets would you call them, so then people can literally make a list for themselves and then create them?
So the easiest way to do it is by getting accounting software, and it will do all of the donkey work for you. What you find is, in the beginning, a lot of people don't want to pay for accounting software because maybe they haven't got that much money coming in. If that is you, I really recommend getting a Metal or a NatWest business account, and you get free agent software for free. There are other bank accounts that give you other types of software as well, but we have a lot of clients that use free agent. If you're making a bit of money, then I would go down the Xero or QuickBooks route, because they're better pieces of software. But initially, if you don't want to pay for something, get free agent for free with a Metal or a NatWest business account. If you don't want to use accounting software, as a minimum, I would have a spreadsheet. Don't keep paper records. It's pointless. It's going to, give so much room for error. You do still see people listing that in a notebook. Just don't do it. It's a waste of time. Get a spreadsheet, and as a minimum, have one spreadsheet tab with your income listed in it and another one with your expenses listed in it. Because if you're going to do your own tax return, you're going to need to categorize those expenses out. So it's easier to do that in a spreadsheet. What we often put together for clients that don't have any software is we'll have a really simple spreadsheet with a date column, a column for like the company or a reference to tie it back to the receipt, and then an amount column, and then further columns which are set at the categories of a tax return. So for example, there might be like a printing and postage and stationery column, or travel column, things like that, so that we can tie them back to the tax return easily, and then just total it at the bottom. But honestly, as long as you're fairly computer savvy, I would just get software in the first place, because it's just going to save you time further on down the line. HMRC are also going to be introducing something called Making Tax Digital soon. It was supposed to come in a year or so ago, but it got shelved for a little while because the system wasn't up and running properly. It's going to be coming in soon, and what that is going to mean is that we are all going to need to keep digital records for our tax returns. So we're going to submit more returns, and you're going to need software to do that. You will be able to get bridging software between your spreadsheet and HMRC, but it's going to be so much easier if you just have it on software. So if you're starting out, just start out the way you want to continue, I would say.
That makes so much sense.
Yeah. We use QuickBooks for our business, and it's so easy. Like, it's
so much easier, isn't
indeed
it?
we have to, we're basically, so as a business, obviously it's a bit separate, more or less, but it's still the same process. So we meet every Thursday, the three of us, so we're three founders, we all meet together, and we just like spend an hour on QuickBooks and just like putting data in it and everything. So it's not fun. I don't like it at all. We all like pushing it like so hard, like, oh, it's Thursday, we have to do it. Okay, let's do it. It doesn't matter. We have to do it. But it's just not fun at all. But it's just so easy because you literally just have to select the expenses and stuff like that, and you just like mark it as, you know, put it into the category, and then the tax that you have for each like expense. And
It's really important to just do it regularly as well, because if you didn't do that every Thursday, although especially for creative people, often the thought of accounts is boring, dull, scary, you know, overwhelming. If you don't do it every week, can you imagine how much you'd have to do and how painful that would be? Also, by doing it every week, you've got actual information that you can work from. You know how much money you're making. You know whether you need to increase your sales. You know whether you need to reduce your overheads. You know, you've got actual live data. If you don't do any of this until you come to do your accounts at the end of the year, it's too late. It's already done. It's already gone. You know, you can't do anything with that information. Whereas actually doing it as you go means you can.
Definitely, yeah. So highly recommend I mean, QuickBooks. This is the only one that we tried so far, but I think this is the most decent one. I guess it still has its little like bugs sometimes, but every software has it. So you just have to like deal with it. It's just going to just refresh the page and, you know, go from there. But for us, it's been a major help. We do have an accountant, a proper person behind the scenes as well, but we rarely like meet with her because she's a bit older. She's not really used with Zoom calls and stuff like that, and we always like do like phone calls. It's really nice, but it's just that she's really helpful because she knows the tricks, and she always tells like, okay, you need to do this and you need to do that. So
the experience
like says it all. But yeah, the software helps us a lot because otherwise it would just be like screwed.
But I think also, Leanne, you made a very good point there, is like, as a business, and it doesn't matter if you're a sole trader and you're just UGC creator, or if you are a small business actually, you know, or a startup, you need to keep track of your sales and your profit and your expenses. You want to see it because then you can actually, as you said, Leanne, it's live data that you can actually make decisions based on. You don't want to be stuck behind and not knowing how much money you make. On at least monthly basis, right? You want to know that you're like in a secure position to actually keep going as maybe, you know, as a sole trader, etc. So I think it's a very important point there. And also we mentioned expenses, the word expenses, quite a couple of times. So I feel like it's worth, I feel like for a lot of people, that would be the main reason why they would play this episode. So Leanne, you mentioned categories of expenses. Could we go slightly into this? Because for the digital creative jobs situations, it's quite tricky, right? And I know that you're getting these questions so many times, but I feel like it would be a sin if we didn't ask you about expenses.
Of course, yeah. This is such an important topic because it is one of the ones where there's so much information out there that is so wrong. So the first thing I'll start with is all of your expenses need to be wholly, exclusively and necessary for business purposes. They are all exclusively for your business as well. That's an important one. So I'm going to give you a few examples. Let's say you are an interiors content creator and you go and buy a vase to style your home, to do a piece of content with. You then go and use that vase personally, keep it in your house, give it to your mum as a present, whatever. Because you've kept that and had personal use from it, it no longer makes it a business expense. If you buy, like, for example, I've got a client who does a lot of homewares and she has been and bought a set of towels to dress her bathroom with. She puts them back in a box at the end of it and purely dresses her bathroom with those towels, never uses them. They are a business expense and it's allowable. These are the areas where it becomes so murky within content creation and UGC and all those sorts of things, because often you need to buy something to create the content with it, but it's then what you do with it that seems to make a bigger difference. What you can't do is put something through your tax return as an expense and then get personal benefit from it, like use it personally. So let's say, for example, I don't know, you are doing DIY as part of your content and you go and, I don't know, create a fence for your garden. Yes, okay, you needed to do it to create the content, and that's really, really important. But actually, you've then got a fence in your garden, and HMRC are not going to buy that as a business expense, not in a million years. So these are the sort of things that we see coming up. The other thing we see a lot is speculative work. So let's say I need to travel to a hotel XYZ in, I don't know, let's say I'm going to Barcelona, I'm a travel content creator. I'm going to go over there and I'm going to record content speculatively to show other people what I'm doing. This is not allowable because it's not, there's no particular trade involved in there. HMRC are not going to look on this very favorably. So it's all things like this which become much more complicated in this industry, which you don't necessarily get in a traditional bricks and mortar business or a traditional industry. It's much more simple. So what I would say is make sure it's wholly and exclusively for business purposes. There are some exceptions to this. So let's say, for example, you travel to another country for 5 days. Out of those 5 days, 1 day is spent working. You can then claim 1/5 of the travel expenses. So things like that, where it is a little bit of a mixture, are allowable. But if you are going on holiday and whilst you are there, you are posting to your Instagram stories, that does not make it a business expense. Like, honestly, the number of times I get this, it does not make it a business expense. Please don't think that's enough. Then claim it against your tax, because it isn't.
Just a quick one. If, let's say this is the scenario, but it is a little bit more on the influencer side of things. So if they actually monetize the content, what they create on those holidays, does that change the perspective of that? If they made money from those videos?
It does. So let's say, for example, they've got a collaboration booked with a hotel and they're getting paid to do it, then yes, it does make it a business expense. Obviously, if you go for 3 weeks and only spend 1 day working, then you can only claim 1 day out of that time.
You need to think about the...
think about it that way. But if you are monetizing it, it definitely changes it because it becomes trading rather than speculative. And this is where it becomes a little bit complicated, because you could literally go on 50 trips to speculatively create some content to hope to get some work in the future. There is no guarantee that you're ever going to get any income from that. So, you can't necessarily say that it's going to be wholly and exclusively and necessary for trade. So this is the problem that you've got. The other thing that you see quite a lot of the time as well is like trips to attractions with your family. Yes, okay, there is an argument there to say you needed to take your children along because they are part of the content. But actually, is it wholly and necessary for business purposes? Not really. You're having a fun day out. So, there's lots of really complicated circumstances which need to be looked at on a case-by-case basis on these sorts of things. And then when you flip it onto more the UGC side of things, obviously, you need to buy that stuff to create that content. But then if you're going to be keeping it and using it personally, it becomes very, very cloudy whether it was wholly and exclusively for business purposes. A lot of people donate things, get rid of it, just use it for content. Those then would make it allowable. But if you're then going to go and use it yourself, it is not generally allowable. So just be really careful on that one. The other thing that I see so often is clothing. Now, there is loads of HMRC guidance on clothing because a lot of people have tried in the past to claim clothing. Because clothing also gives you warmth and dignity, it is not generally allowable. There are very certain circumstances when there is. For example, if you've got branded clothing that's counted as advertising. So like you've got, polo shirts that tradesmen wear with their logos on, that would be allowable because it's got a logo on it. But generally speaking, even if you've had to go and buy those clothes to wear for that content, unless it's set out as a term and condition in that contract, for example, like let's say you were working with a clothing store and it was part of that. But generally speaking, in those cases, you'd be given the items anyway. So, then it becomes a bit more of actually is it a costume rather than general clothing. But 9 times out of 10, clothing is not allowable, and it's one we see quite a lot of the time.
So just on that as well, I know you made the point there of it has to be for business purpose. So say, for example, I have a brief, I have to go, for example, picnics and stuff, like that's a lot of content at the minute, and they're like, we want a picnic basket. I'm like, okay, I will go buy a picnic basket for this. Say then I buy that. How do I prove, for example, then I've bought that was for a business expense. How do I prove if I am not going to use that, for example, personally, if that's just for a business expense? Because I know for me here too, it's a tricky one. Like, you can't ask for evidence, or how does that work?
Well, so you can't necessarily say that you've never used that. What I would say is keep documented evidence about where the brand has asked you, like let's say, to go and buy a wicker picnic basket to be, on theme. So I would definitely keep the emails related to that or the messages related to that as well.
Oh, right.
Like that's a really good.
So I guess the advice here would be, if you guys have conversations with brands, make sure that you have that paper trail. So make sure you say, by the way, guys, I don't actually own a picnic basket. Do you need me to, acquire it in order to make the video, right?
Yeah.
So then you're making yourself accountable. Okay, that is a great piece of advice.
None of
Because I feel
this
like a lot of the times you do need to get those things.
Yeah, and I think if you've got to get it for the shoot, then it's, and it's set out in the terms and you can't do the shoot without it. I think you've got a much better argument there for it. What I would say is we are waiting on HMRC to release some proper guidance and legislation on this industry. It took them years to do crypto, so it's probably going to take them years to do this one. And what's likely to happen is somebody very high profile is going to get caught doing something they shouldn't be. They're going to make an example of them, and the case law is going to bring into focus something that we're going to all be able to use.
Scapegoat. Yeah.
So what you need to be doing at the moment is being as careful as you possibly can to not break any rules, because the rules aren't really there yet to follow. It's not as black and white as it is in other industries. We're sort of, we're basing a lot of it on really outdated legislation. But just always ask yourself, is that wholly and exclusively? What can I do to back it up? So if HMRC investigated this tomorrow, would I be able to confidently say, yes, that was a business expense? And if you can, and you've got anything you can save to back that up, then brilliant. But I would just try and save and retain as much as you possibly can. So screenshots of conversations, if it's on Messenger, for example. Let's say your Instagram gets hacked and you lose your account. Don't rely on it being in the messages. Make sure you've screenshotted that and then just save it in a Google Drive folder, or, like a cloud folder somewhere on your phone. And then you've got it if anything happens. So yeah, I would just, as much as possible, save and back up so that you've got a really convincing argument should you need it.
Mm-hmm.
Yeah. For this then, this is just me then, for to kind of summarize that up, I'd say to then creators, if you're working with a brand, have all your, because obviously creators will have their raw clips or their edited files, have then a folder for the brand per brand, and then having that, if you had to get stuff, the receipts, keep it all together, that then, as you said, Leanne, you're not dependent on DMs or emails that you may have deleted ages ago, that it's all in one place. So that's really
it's really
I didn't know that.
But anything you can save in that way is going to make it a lot better. Particularly, let's say, for example, you save it in a file with the raw video image. If HMRC ever ask for it, you can say, here's the conversation, here's the video of me putting it into content, this is what I was paid for that job, therefore it's allowable. You can go down that route very easily, and you're just protecting your future self, aren't you? If something does happen, you are protecting yourself, in that you're making your own life so much easier. Right. So if you do get investigated, it's going to be really stressful. So anything you can do now to make that, it's not very likely that they don't have a huge amount of manpower, but it does happen, and they generally swamp onto one industry. So if they're coming after UGC, for example, they'll go and hit everybody all at the same time.
Loads.
Yeah.
Yeah. God. So coming back to expenses for a little bit, any kind of tech things, because we had an equipment episode a couple of episodes ago. So I feel like it would be really good to know, does that work again with the solely used for the business, or, how does that work if someone gets a lamp or a laptop? I feel like if we could get into that a little bit, that would be very helpful as well.
Yeah, of course. So again, it needs to be wholly and exclusively for business purposes. But if you're a sole trader and you say get a mobile phone for 50-50 business use and personal use, you can claim 50% of that. It's different rules if you're a limited company. What we find with most of our clients, though, is that things like phones, they hold a much higher business percentage than they would do in the traditional industry, because you're using them so much. If you go and buy a computer to edit your video clips on, for example, that would be allowable. There might be the odd occasion where you use it for personal use, but as long as that's really negligible, you could claim 100% of the cost there, because you do need that product for your business. If you've got a much higher level of personal use, let's say you use it every day to watch Netflix on, then obviously you might need to adjust that percentage a little bit more. But normally speaking, if it's predominantly for business use, you can put that through. Same thing as let's say you need to go and buy a desk to do your work at, you need to buy some equipment, files, whatever it might be, that should all be allowable. When you're buying expensive pieces of equipment, there is some different rules on how these are put through the accounts. It can become quite complicated. So if you are very asset heavy in what you're purchasing, it might be worth getting some professional advice to just make sure that they are included the right way in your tax return, because there's different ways you can include them depending on whether you're on what's called the cash basis or the traditional basis. It's quite complicated, but there are certain circumstances where it's better to go down one route than the other. And then you can potentially claim a percentage over a number of years, for example, rather than all in one go. So if you've spent a lot of money, it's worthwhile speaking to a professional to find out which way to include it. But definitely, if you've bought something for business use, like, it's going to be allowable in the same way as software as well. That's a really important one. You see a lot of things like Instagram verified, for example, or iCloud subscriptions, because you have to get a much bigger iCloud subscription to hold all of this data that you're recording. Those things are allowable.
Perfect. What about Canva?
Oh yeah, I was about to ask.
Everyone loves Canva, don't they? Yeah, definitely. Yeah, things like Canva, other video software, editing software, anything like that, Canva, definitely allowable. Just make sure you're keeping all of your receipts, which again, if you've got software, is easy because you can just upload them into the software.
And what about, because I've heard the other day someone on TikTok, or Dave from the pub, they said that they put their Amazon Prime account on
This
there.
one is going to be a little bit, I would say, sketchy, because you mean to say that you never buy personal things on Amazon Prime? Do you never use Amazon Prime Video personally? I would not generally allow that to go through unless it was a business Prime membership and it was solely used for business and no personal stuff was going through there. But if HMRC look at your Amazon account, they're going to see that you also bought, I don't know, toothpaste.
They're going to see all those,
like, it could be anything, couldn't it? I would say no to that one, because whilst you might use it for certain business purchases, it's got a heavy personal use in there. So no.
Not worth the risk, basically.
No, definitely not.
And just another one I have, I suppose, on expenses as well. When it comes to working from home, because we all know as like UGC creators, like a lot of our work primarily is working from home, working in an office, whatever. Could you explain that for us? Because I know there's always a lot of confusion about what's allowed and what's not there.
So there is 2 ways to claim for work. And this is sole trader advice, by the way. It's different for limited companies, but I think most people would be more relevant on the sole trader thing. So I'll stick to that. There are 2 different ways you can do the working from home. One way is the flat rate, which is, if you Google on gov.uk, look at simplified expenses for self-employed working from home, there's a flat rate based on the number of hours that you can claim. The highest rate for this is £312 per year. Annoyingly, HMRC have not increased it very much over, in fact, I don't remember the last time they did. So it's still quite a low figure based on the fact that bills are so high now. The other way you can look at doing it is what's called apportioning your household expenses. So you basically collate all of your energy bills, water bills, council tax. If you own your home, you can include mortgage interest, but not capital repayments in this, or the rent figure. If you've got a cleaner, you can include that. Add everything together and then apportion it based on this percentage of the house that you use for business purposes, and then also time apportion it. So let's say, for example, you've got 5 rooms that are all the same size in your house. Obviously, that's not very realistic, but let's say you do. You would use one of those for business. You would divide it by 5. And then let's say you work 8 hours out of 24, 5 days a week. You would also divide it by the total number of hours in a week and then times it by the hours you're actually working. So you apportion it the time as well. It becomes complicated, and often you'll find that unless you either have very high bills, using a lot of extra energy for your business for some reason, like for example, you have like a whole room full of lights and setups that use loads of energy, then potentially you might be better to go down the apportion way. But if you're either not confident in doing it yourself, or you're not sure what you can really include, or let's say you record content in all different rooms and you could not possibly quantify it, then just use the simplified expenses for self-employed, because as long as you're doing enough hours, you don't need to really quantify it so much, whereas you would need to keep proof for the apportioned method of doing things.
I think that's a really interesting one, because I know even for me, when I was trying to work out things, I was like, what way to do this? Because a lot of the time, like, your office is your home, like you're working and whatnot too.
Yeah.
Another thing too, I suppose it goes kind of circling a little bit back, going into like mileage and cars and stuff. And when it comes to actually, say for example, I have to shoot at a location, can I claim back then for the mileage for that, or my car as well? And how would people go about doing that?
So the best way to do it, let's say you're self-employed, you own your car personally, and it's predominantly for personal use. The best way to do those sorts of things is to claim the HMRC's mileage rate, which is 45 pence a mile for the first 10,000 miles, 25p thereafter. That gives you a contribution towards the fuel and also the wear and tear on the vehicle. You can't claim that plus the fuel. You can only claim one or the other. And this is a really important point, is that whilst you own that vehicle, you have to stick to the same method. So you have to either go for the fuel and expenses, or the mileage rate. Often the mileage rate works out a lot better, unless your car's really uneconomical, and then it might be better to go the other way. What you would need to do is make sure the trip is wholly and exclusively for business purposes, there's that phrase again, and then you can claim the mileage there and back. Things you can't claim for: driving to and from a permanent place of work. You can look up on gov.uk what HMRC class as a permanent place of work, but it's unlikely that would be the case in this situation, because if you're going to a location to film content, it's not likely you're going to be going there permanently. You can also claim, like, let's say, for example, you needed to post some documents back to a brand that you're working with. You can claim travel to and from the post office. You need to go and purchase some items purely for business, and it's just a business, shopping trip. You can claim mileage there as well. So there's lots and lots of things. What you would need to do is keep up, like, the easiest way is to keep a spreadsheet, but there are some apps that track this as well. My clients have had varying success with the apps. We are yet to find one that's really very good, although certain QuickBooks packages have it, I think, in theirs. But we're yet to find one that everybody has said, oh yeah, I can use this and I'm happy with. So the easiest way to do it, old school wise, is to have a spreadsheet with the date, the place you went, the starting postcode, ending postcode, number of miles you've travelled, and the reason why you went there. Make sure you include a reason, just so you can tie it back. So, like, for example, went to Tesco's, bought picnic goods, going back to picnics again, for XYZ campaign that I'm working on. So just keep a really clear record of everywhere you need to go. Then at the end of the year, just tally it up and include it in the travel expenses category on your tax return. So 45p a mile for the first 10,000, 25p thereafter. And it can actually add up to quite a bit over the year. So it's quite a good one to include.
I suppose another thing that I would have is, when it comes to people trying to be as efficient as possible coming towards like their tax and stuff, what's some things you'd recommend that they would do or like take into account that they may not have throughout the year, I suppose, as well?
So one thing I always recommend that you do is obviously do your accounts regularly, but make sure you just double check that you haven't missed anything. So, for example, search your email account for invoice, order, bill, those keywords that come up onto any invoices. Look through everything you've purchased. If you're using a business account, make sure you've been through your bank statements and just check everything is on there. You find that people will miss a lot of stuff. And now, because we buy most stuff online, you've got much more of a log. So, check through your Amazon account, all these things, and find anything for business purposes on there. Also, make sure you're including anything you pay for on direct debit that you might have forgotten about. So insurance premiums, for example, if you've got some like professional indemnity or public liability insurance, make sure you're including those. Make sure you're including all those softwares that you might have forgotten that you haven't cancelled and that are still being paid at $3.99 a month or something. It will add up over the year. Then make sure you, like as we mentioned before, you've looked at the working from home. Make sure you've included your mileage. It's just making sure you've covered all of your bases, but keeping good records through the year will mean that you're less likely to miss any of this stuff anyway. And then make sure, for example, your phone bill, like look at that, how much of a percentage is business versus personal, and make sure you're including some of that as well. So, for example, with UGC content creators, often you find that it's like 90% business, 95%. Obviously everybody's different, but because now phones are not just used for making calls, data and those sorts of things are a huge percentage of it. So often we find that we're putting through very high percentage of business purposes of the phone bills, rather than maybe, like, I don't know, a traditional shop owner might only use 20% business. In our industry, it's a much higher percentage.
Just on that one too about the phones then, how would you work out? So you said most people put in 90%. Is that just me sitting down and going like, right, I work Monday to Friday, I'm doing content on my phone constantly. Is that how I'd be working it out, or what?
Yeah,
how would
so
people come up with that percentage to know it's right?
So traditionally, we used to look at phone calls, but obviously that's no longer relevant at all in this industry. So we used to look at the business phone calls versus personal phone calls. Can't really do that now. So I would do it based on time and data consumption. Like, let's say, for example, you're uploading loads and loads of videos onto social media. Your data consumption is going to be much higher. So if you look at it as data consumption, you can get an idea from there. If you cannot track it in any way, shape or form like that, look at the number of hours you're using it for, and I would use that as your basis. But you must keep a record.
Oh, the time screen.
Yeah, the awful time screen that tells us how many hours we've spent. Horrible, isn't it, to look at? But it's really important to back it up and keep records on this.
Perfect.
Amazing. No, this is some amazing information, and I think to have an episode on that was such a good idea. Just the expenses, I feel like, is such a massive topic to have a conversation with, and I feel like just expenses is a reason enough to actually look into getting an accountant for yourself, just so someone can help you with showing you how to save your money, because this money is your money. You just don't necessarily see it that way.
Yeah.
I had a question actually popping in my head when we were discussing the forms that we have to submit, etc., every year. How do we go around when there is an international collaboration? So let's say the client is American, they have different forms. They ask you to film their W8 whatever forms, etc. What does that mean for us? Do we need to worry about it at all, or is it just that we're invoicing them with our invoice? How does that work?
So it's all down to the place of supply, which is a hugely complicated area. But generally speaking, if your business is based here in the UK and you're, let's say, invoicing the US, you would just include it as normal income. The complicated thing comes if they want you to invoice them in dollars. One way to work it is the actual amount that hits your bank account. The other way, you can use HMRC's approved conversion rates. So every month there is a list of countries that HMRC publish on their website, and there's conversion rates for every single one every month. So you can find the month that the income came into and the year, and you can look back historically on HMRC's website as well and use their rates to convert it. But in terms of accounting for it here in the UK, if you're a sole trader and you're not VAT registered, if you're VAT registered, it becomes a lot more complex. So definitely get professional advice at this point. But if you're not VAT registered, you would just include it as normal as income in the UK, because you're in the UK and you're declaring your taxes here.
Mm-hmm. So whatever amount hits your bank or your PayPal or whatever it is, make sure that this is the amount that you... Okay, perfect. Yeah. And then you mentioned VAT registered. Yeah. When does that happen? What does that mean?
So it's 90,000 in a 12-month rolling period. Do not get confused thinking it's 90,000 turnover. This is total sales, and include in there any gifted items. Again, that horrible term, gifted items, which isn't a gift, but include in that those are also count towards the turnover. It's 90,000 in a rolling 12-month period. So it's not April to April like the tax year. It can be in the last 12 months. So if you're getting close, you need to keep recalculating it month on month. If you get to the VAT threshold, I strongly recommend getting your own accountant, because you can make mistakes so easily here. There's also things you can reclaim the VAT for that you may not know about. For example, you can go back 4 years on assets. Like, let's say you bought a computer, you can go back 4 years and get that. If you go VAT registered, you're going to have to submit your VAT returns on software. So get accounting software. That's like the first point of call, which even if you're not using accounting software now and you're at like 60,000, let's say, just start thinking about moving over as soon as possible, because you're going to need to be on it and set up already. And it's much easier if you already know how to use it. VAT rates that you charge out can be very, very complicated. You need to just get professional advice if you're not confident in it. And then obviously what happens here is you register for VAT, you then charge VAT on all of your invoices, and you can reclaim the VAT that you have spent out as well. So it offsets it a little bit. There is another way of doing it, which is called the flat rate for VAT, which you need to meet certain criteria to be able to use. But what this would mean is you charge 20% VAT on your invoices, but then you would pay HMRC a lower percentage. So you actually sometimes can end up better off if you which one you go down depends on your circumstances and what your expenses look like. But if you're not paying out loads of money in VAT, like for example, your only expense is software, then it might be better for you to look at the flat rate. But again, get a professional to calculate which scheme is right for you.
I think we've all got so much valuable information from this today. I know. Leanne, before we finish up, do you want to give your socials, how people can get in touch with you or whatever as well? A shameless plug, why not?
Yeah, thanks. Yeah, so if you want to come and find me, I'm the Profit Hero on Instagram and TikTok. That's probably the easiest way to get hold of me. And also on there, if you want any more, I cover a lot of these topics on my Instagram and TikTok videos. So just check me out on there and you might find some more useful information.
Thank you so much. That's been incredibly valuable, and I think that's going to help a lot of creators and people out there, definitely, to try and get control of their finances as well. And I think the main takeaway too is just be organized and just stay on top of it. Thank you so much, Leanne.
Thank you.
Thanks, Leanne. Thank you so much for your
Thank you
time.
so much, Leanne.